Hello and welcome to another episode of ET Market Smart Talk. Well, I'm your host, Shraddha Janand, and today we are diving into a very timely theme, safe haven shift. Is it the gold, US Treasuries, or AAA India? The global bond market are seeing a sharp movement. The dollar is under pressure and Japan's yield have hit multi-decade highs. Against this backdrop, how should Indian investors position their fixed income portfolios? Well, to T-Goat this, we have with us Puneet Pal, Head Fixed Income at PGIM India Mutual Fund. Puneet, thank you so much for joining us.
Thank you. Thank you, Kshitij, and good morning.
Thank you so much for taking the time out, Puneet. And just to begin with, how are we placed compared to our peers, or you could say the peer set based on the macroeconomic backdrop?
Well, I think in our fixed income portfolios, what we are expecting is that the steeper yield curves are there. I mean, we have
Okay.
seen the yield curve steepening over the last almost 4 months now.
Hmm.
And we expect that this steepness in the yield curve will remain, and that's a phenomena that's replicated worldwide. So not only in India,
Okay.
but across the globe, if you see, especially in the developed markets, you are seeing steeper curves.
Sure.
In our case, also that's the case. Only thing is that the reasons for a steeper curve, especially in developed markets, is different. In our case, it's slightly more different.
Yeah.
But what we are playing for in our portfolios on the fixed income side is for steeper yield curves to remain.
Yeah.
And on a tactical basis, we are looking at adding some duration at the longer end
Hmm.
because
Hmm.
they have sold quite significantly over the last 2 months, especially after the last policy, MPC policy in August.
Hmm.
I mean, just to give you a perspective on the long end valuation in India, you are getting a 40-year risk-free sovereign bond of Government of India at close to 730,
Okay.
whereas a mortgage of 20-year in India, a housing loan of 20-year in India probably will be at around 735.
Sure.
It's a decent valuation, but that's
Yeah.
purely from a technical perspective. Otherwise, we are expecting the steepness of the yield curve to stay.
Right. So, just to be, from a 360-degree point of view, so how should investors sort of balance between sovereign bonds, corporate bonds, and private credit AIFs, given the evolving risk-reward trade-off that we are seeing?
So within the domestic Indian fixed income landscape, we think that state government bonds and corporate bonds look attractive.
Okay.
In our preference, state government will be the top investment opportunity
Okay.
within the fixed income space, simply
Yeah.
because of the spreads are pretty attractive right now. I mean, just to take the 10-year benchmark yield on the central government side is close to around 647 right now, whereas a
Mm.
similar 10-year maturity state government bond will be closer to 730.
Right.
So from that perspective, if you see a 80-85 basis differential, that's pretty attractive. So we'll prefer state government bonds at this juncture, and then the corporate bonds, and then the sovereign bonds.
All right. So, what is happening with the dollar? In fact, it sort of slipped to a 7-week low. Can the US dollar still be considered a safe haven asset in times of global turmoil? I know it could be, very soon to answer this question, but nevertheless, yeah.
No, you very aptly put it that, I mean, there's a big debate going on, right, on whether the US bonds or the US dollar retain their safe haven appeal or not. So I think, in our view, there is no single alternative to the US dollar as
Okay.
of now. What we are seeing is that people are diversifying into other assets, into basket of other currencies.
Hmm.
So there is definitely going to be some diversification away from the US dollar, but that trend
Okay.
will take a much more longish time. It's
Okay.
not going to happen overnight.
Hmm.
I mean, if we just look at the foreign ownership of US treasuries, they have not gone down dramatically. They are still
Okay.
hovering around 24-25%. So
Uh-huh.
overall, this trend of diversification will be there, but from a single currency perspective, the US dollar still, is probably going to retain its appeal in terms of prices.
Hmm.
I mean, there's no other single currency which can replace the US dollar as of now. It will be a basket of currencies and some other assets which investors can diversify into.
Absolutely. And what risk should investors monitor more, most closely in the coming quarters? Is it the geopolitics, oil or fiscal slippage or global liquidity?
I think geopolitics and fiscal slippage should be or should be monitored quite closely.
Okay.
I think from a Indian perspective, bond markets are still worried about the impact of the GST tax rationalization and the slow growth in the tax revenues. What kind of impact will have on the fiscal situation a
Hmm.
quarter down the line? Though the government is has maintained that they will stick to the fiscal deficit target, but I think the bond markets are worried, probably more so for the next financial year, not maybe for this financial year, because the
Hmm.
GST tax cuts, I mean, will be just 5 months. It will upset the maths only for 5 months this year.
Right.
So overall, there is a concern on fiscal space, and that concern will remain. Even globally, if we see, there is a big
Yeah.
debt challenge. I mean, if we speak about US,
Hmm.
US fiscal deficit is a major challenge for the US policymakers. So that is, I mean, reflected in the steeper yield curves. So that's
Yeah.
not going to go away anytime soon. So that
Yeah.
risk will remain. We all know that a fiscal crisis is brewing in France also, in terms of the higher debt to GDP over there.
Hmm. Hmm.
So that remains a key challenge for the markets. And apart from that, geopolitics also. I mean, what kind of things that we are seeing.
Right.
Uh, so that's again is a risk for the bond markets overall.
Absolutely. Now, let me also get your perspective, on the Japan. So, with Japanese 20 to 30-year bond yields climbing to multi-decade highs, could this sort of trigger a global repricing of the long duration debt? And how should sort of Indian investors, debt investors per se, position in the GSEC and the corporate bonds?
Yes, it's a very pertinent question, Kshitij, and I think the bond markets, or I will say, markets across the globe, not only the bond markets but other asset markets, were
Mm.
also worried about the rise in the I mean, Japanese bond yields, and
Right.
especially the pace of their rise. And
Mm,
they have
mm.
risen quite fast, but it has not reflected in any, I will say, downside risk, especially in the asset markets.
Okay.
So if we look at what markets were considering that at the start of the year, that if the Japanese bond yields or interest rates were to rise, it can have
Mm,
an impact on the yen carry trade, and that can impact the equity markets.
mm.
But that has not happened so far. So
Right.
fundamentally, yes, I think at some stage probably it can have an impact across the globe. But right
Mm,
now, there is no evidence to back that. I mean, for example, your 10-year, 30-year Japanese bond yields have climbed up by almost 50, 60 basis in the case of 10-year, and almost a
yeah.
percentage point in the case of the 30-year. But the
Yeah.
Japanese equity markets are up quite healthy. I mean, they have done
Yeah.
pretty well.
Exactly. Yeah. Yeah.
So
Right.
that impact has not been felt by the markets, but one has to keep in mind on whenever one is talking about the risk across the
Yeah.
globe, then that definitely is a risk.
Mm.
But having said that, there is no impact of the markets of the rising bond yields in Japan as of now, but one needs to keep a watch on that.
Absolutely. And, your sort of take on the yen carry trade, much talked about the yen carry trade, which is happening. I mean, the rise in bond yield. Yeah.
Yeah, so as I said, I mean, there is no impact which is reflected in the markets as of now.
As of now.
At some point of time, I think it might have an impact. The other way to look at that is that the bond markets are always forward looking. So the yield curve in Japan is signaling more rate hikes to come in Japan, but the yields may not
Mm.
actually go up. They are much more than the movement that what we have already seen so far.
Exactly.
So there are various, I will say, nuances to that. But
Mm.
just to answer your specific question, I don't think the markets really have got impacted by the rise in bond yields in Japan as of now.
Mm. All right. Now, with so much happening around, should Indian debt portfolios, look more towards U.S. Treasuries, gold-linked bonds, or domestic AAA corporate for stability?
I think, as I said earlier, Kshitij, that state government bonds at close to 730 yield on the 10-year are looking
That
pretty
will be the
attractive.
pretty attractive. Yeah.
Yes. So from a investment perspective, we think that's a pretty good investment opportunity.
Mm.
Uh, Long bonds also are a decent opportunity. Only thing, one needs to have a stomach for high volatility over there,
Right.
because if we go back to the time when RBI actually started hiking rates back in 2022,
Uh,
your 30-year bond yields, I think, have topped out around 780 or so. Right now, they are around 730,
right.
when we are 100 basis lower on in terms of policy rates. Uh, so from that perspective, I think the valuations are looking pretty attractive both on a state
Mhm.
government bond as well as long bonds. But again, you have to keep in mind the technical nature of these things. So overall, from a long-term investment perspective, I'll still prefer state government bonds.
Mm.
Uh, Gold has already rallied quite a bit this
Oh,
year,
yes.
and it is the best performing asset class. So one has
Yeah,
to, if one is thinking of investing, then they have to be aware of the potential downside it might have.
true.
But from a domestic perspective, I think state government bonds are a very attractive investment opportunity right now.
Absolutely. Well, on that note, thank you so much for your time, Puneet, for sharing those insights. Clearly, the fixed income landscape is actually evolving rapidly, and for investors, the debate on where to park money safely has never been more crucial. On that note, thank you so much for your time, Puneet.
Thank you, Shitesh.